Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, January 9th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, what the thing I wanted to look at here heading into week 2, and I mentioned this to our trading room, was that we've been forming kind of this expanding type of pattern here. Same thing in the NQ, and right now we've just gotten to those new highs. The previous high of the month here is also the previous year's high. That's the one that we're really watching early this month here. We've got a squeeze to begin the year, and then when prices got above those 2273s, previous month and year's high, we obviously saw a bit of a rejection and then back down. So not a significant rejection. Now we're seeing inside day here as we head into RTH, and we're holding it high. So this is going to be very interesting right now to see how price plays out from here, because typically speaking, when you come up to highs like this, you're looking for signs of rejection and perhaps a move back toward value. At the very least, that would be about 57s, because that's where we're coiling around. And at the most, perhaps a push into new lows below these lows into those 2214s. I mentioned earlier this year that I thought that we were likely going to come back into 2214, as we were likely building out a larger balanced profile, and from there you'll likely see it squeeze even higher. But right now, first things first, we got to see how this plays out here. So this is going to be very, very important here. So continue to watch 2273, 2277. Above 77s will begin to squeeze into the next upside target. And if we start pushing higher, obviously the very first level we're going to be looking for as a significant target is going to be the R25 PivotBoss pivot there, and that's the 25% expansion of the previous month's range, and that's 2296. So that's 25% beyond the previous month's high. So that's going to be the first major target to reach for if this thing is breaking through 77. So keep that in mind. All right, let's take a look at the intraday time frame here. Here we are on an intraday basis. So what's happened so far is obviously price pushed higher off the previous session's close, and then came back to it and failed to hold a support, and is now holding below it. You can see right here we have daily and weekly pivot range in that zone. Currently we have VWAP that's pushing lower. We're trading into an LVN right here. We'll see how this one continues to play out, but at the moment, if price can remain above 66, then the expectation would be a return back toward highs. This is previous resistance here. You push through it, so if prices, it could even get below 66 and form a trap and then go. But the idea is 66 is going to be the pivot to watch. So if price drops into that area and we start to see it work its way higher, you may end up seeing a rally of 10 to 12 handles back toward 76 to 78. Any failure to hold 66 would rotate this back downward toward 57. Again, that's the HVN of the current little range here that we're developing. All right, let's take a look at crude oil. Here's crude, and this is the monthly PivotBoss pivots. We're usually looking at the weekly, but I have the monthly on right now since we are in the new year, and I wanted to see how we're playing off of December's range. And so far, you can see here's the previous high. That's the previous month's high. And that's also the previous year's high. And right here, first trading day of the year, rejection all the way back to the pivot point, the monthly pivot point right there. Then price rallies back into the previous year's close, in the previous month's close. That's the white dotted line, just shy of 54s. And that is where any price above that zone has been rejected so far. Today we didn't even get right on it. We got within pennies of it, and then now we're breaking through this low right here. And this is what I would typically call in our trading room a 50% stop run day here, where price here is breaking and running the stops below this previous low. And typically when that happens, 50% of the day's range is above that level, and half the day's range is below it. That median price right there will get at or below that line. And that's typically when you see the stops come out. And then in day 2, which would be Tuesday, you would come up here and see if there's a defense by the bears for a shot at new lows. So that's kind of what's playing out right now a little bit. The key level to watch again is going to be that previous session's low price. That's the major level to watch right here, 53.32. And if price begins to squeeze back above that zone, then the next level up to test would be 53.89. So those are the key levels to watch here as we head into the early portion of the week. In terms of overall direction, I mentioned this before, 51.67 to 52 is a major area of resistance, and now price is holding above that area for the first time and establishing acceptance. Typically speaking, you usually see a lot of wiggle up here as it attempts, and it wouldn't be out of the question to see a retest back at these levels at some point. But overall, this is the range we're watching, and 51.67 is the major level to watch in terms of a pivot, because if there's any failure to hold this level, the expectation would be a rotation back toward composite VPOC. That would be 46.69. So this is a very important level to bulls that are looking to expand this thing to the upside. Remember, I mentioned before that from 52 down to about 42, that was the previous range. And the next range above would take us from 52 up to about 62. So that's why it's very, very important, this level, because if it can hold above that zone, I think generally speaking, we'll work our way toward 59.5, and eventually over time up towards 62 and begin a larger range. But it all starts with this level, because any failure to continue this pattern would suggest a huge rejection right back toward composite value. So that's going to be something to watch. 46.69, very important. So if there's any rejection at 51.67, you're likely to see a very quick rotation right back down. So something to watch on a longer term basis. Now if we look at this thing on an intraday here, there we go. One thing you'll notice here is that crude oil has been in a steady downtrending market. You can see it's been trading outside, just around and hugging that S3 band right there. So this is the third standard deviation of VWAP on the PivotBoss bands. And so this is going to be something to watch out for here, because when you have a trend that's like this, it's a price discovery phase. And you can see right here, a key pivot was broken. That's an LVN, about 53.40. And we've been dropping ever since here. So it's very difficult to buy down here expecting a return to value until this S3 band starts to level off a bit, because with this slope, that's still indicative of a price discovery phase. So how much lower can we go? We'll see. We have this 52.80 level is a very clear area of support that we'll be watching here in the trading room. If price can hold that level, the suggestion is that you'd likely see a return at least to value, that's VWAP here, with the potential to see move all the way into 5-day VPOC at about 53.70. Failure to hold 52.80 would rotate this back toward 52s, and remember, 52 down into that 51.67 is going to be a major area to watch whenever that test does occur. That's just here. So, I mean, we could get there today. It's probably too far today, but anything can happen. So this might be a tomorrow test or something like that, but this is the major area I'm talking about, so we'll be keeping an eye here should we see a test in that area. All right, let's take a look at gold. Here's a look at gold right now, basically just trading in a range. You got to fade the edges on a shorter term time frame. 1170 down here, 1186 up here. That's the range. You have a major LVN there. So the expectation right now is that we have an uptrending market, and when you have a fade the edges type of day, you favor the edge in the direction of the current trend, which means every rotation into 1170 should be a great buying opportunity. Up here, there will be some selling opportunities back down, but you just got to know that at some point the expectation would be for an upside break. So at some point, stops will get run. And so you want to be more careful if you are counter trend trading at these edges. But right now, we are in a clear trading range market from 70 up to about 86. And the expectation is to fade the edges at each side with an upward bias. And eventually, a break through 86 likely pushes into the next upside key levels, 1190 and 1200. All right, let's take a look at the NQ here. Nice uptrending market for the NQ. On a weekly, rather a PivotBoss monthly basis here, what you see is price is pushing beyond the previous month's high, the previous year's high, and that was something that we talked about before, because I mentioned before that we're building out a potential expanding range. We're doing this right now, and then we came up, right? We came up through this area, and now we've just hit the top. We're outside of this range. So what I told our trading room was that we're looking up here for signs of rejection that would suggest at least a return back to value, with a shot at running the stops below this previous low and fulfilling the opposite side of the edge. And it makes sense, typically speaking, when you start the year and you flow one way and then you get the counter flow the opposite way. That would be a big wave down that would knock these out, and you would likely return right back toward 48.06.5, which is value, and that's an MCV POC, right? So I think that would be defended in the current uptrending market, but that's looking out into the next several weeks. So right now, first things first, how does price respond above the 49.94 previous high? That's going to be very important. Can we hold above that high? If not, the suggestion would be a rotation back toward 49.40 and perhaps a move into 48.40. All right, let's take a look at the intraday time frame. There it is. Now on an intraday basis here, we have a clear uptrending market. And you can see this is the previous close there. And then you have 49.94 right here as the previous month's high, right? So that's going to be an area right there that's going to be very, very important. Failure to hold that zone would suggest a continuation back toward 49.52 and perhaps lower. So that's going to be a very, very important area right there to continue to watch. 49.94. Holding that zone would suggest that we just continue to build out at these highs. So basically, if we drop down, we can do this, and just continue to try and build acceptance above that zone. But right now, it's a short-term trading range, and you got to continue to watch that 49.94. I do have one quick announcement. I will be hosting a free market outlook later on this afternoon. I'll be sending out something on Twitter so that you can join me later on. I'll be providing my market outlook for several of the futures contracts, and perhaps doing some stock scans. I'm also honored to be a part of the Denver Trading Group's webinar series this Friday, January 13th. I'll be presenting on a topic that I think a lot of traders will enjoy, which is the absorption signature. It's a PivotBoss signature setup, and we're going to be talking about how to identify it, where to enter on the chart, how to manage the trade like a pro, and how to find it in multiple time frames. So it's going to be one that you're going to want to watch as well. You'll see this all on Twitter and social media, and perhaps even receive some emails about it. So we'll have a great week lined up, and I'll see you soon. So good luck, trade well, and we'll see how this market plays out.